Hello friends, this is Marv Eisen from Timeless Dollar Trading Academy, and today, September 15th, I'm making this video a little later than I normally do. It's about 11:15, about almost 2 hours into the trading session, and I want to make a point regarding the way I trade, and 2 points rather about the way I trade and the way I teach, and some of the tools that you want to use for short-term versus long-term trading. Now, for short-term trading, I use 6 trade setups that are easily memorized with the letters GST, TMC, and those stand for gap, support and resistance, time and price, trend, momentum, and candlesticks. And those are the 6 trade setups that I teach in my course at Timeless Dollar. And I concentrate on these 6 trade setups because they are predominantly the ones that are most easily seen, or that you can see and make sensible trades off of. If the setup, of course, doesn't work out, then you know that it didn't work out immediately, and you can get off without incurring too much of a loss. But those trade setups are for short-term trading. What about longer-term trading? Now, for longer-term trading, I use what's known as the Taylor trading technique, or the Taylor trading zone, or the Taylor book method. And you can read about this either online, or you can study it on your own. You can get my daily trading zone numbers each day, and I'm going to go into that a little bit today in this video, although I want to keep it short. Now, today, September 15th, prices came into the market. Now, this is the E-mini. On a 3-minute candle, there are 4 points between each horizontal line to give you a sense of perspective. And this black line represents the previous day's close. The market closed here at 39.45 or 46, and the market just opened. This is just prior to the market. I have my cursor at 9:27. I'm going to pan over to the left so you can see where the market has been trading for the day. Now, I'm a great fan of the gap trade. Now, the gap trade is where the prices open significantly above or below the previous day's close. And this is a trade that has been successful for not just me, but for traders for many, many years, because it's a trade that, number one, the setup is easily apparent. And number two, you can count on the gap trade closing 70 to 75% of the time. So with that high a success rate, you can easily see why the gap trade is one of my most highly recommended trades. Remember, GST, TMC, where the G stands for gap. Now, let me pan over to the left to show you where prices did trade. Okay? Now, it's just about, let's see, it's just after 11:15. Prices opened right over here at 39.28. The gap, of course, was up here at 39.45, so that's about a 17-point gap. And the prices bounced around a bit. Again, 4 points between each horizontal line, so you bounced around within 10 points, and then closed the gap in a time and price trade. GST, T, time and price. This was a time and price trade where the prices move in one direction for a certain amount of time, consolidate, and then move in another direction for the same amount of time. So there are 2 trades of my 6 trades that I'm pointing out here. GST, TMC. Now, of course, the gap trade was easily seen. The setup is easily seen because we can see that there was a 17-point gap. You can see that. You don't have to be a trading genius. So that's an easy trade to see the setup. As far as the time and price trade, well, if you weren't convinced that the gap was going to close, you could wait to see if prices were moving up here. And if you could see the time and price trade setting up here and get on for the second leg of the time and price trade, which actually is the trade. The setup is the first leg and a consolidation. So 2 trades of my 6 were called within the first 20 minutes of the trading day, and successful. Now look what happened after that. Now, after that, I have my Taylor trading zone. My Taylor trading zone is a longer-term trading technique. And with the Taylor trading zone, you have to remember that George Taylor was a swing trader. He wasn't a day trader. So the tailored trading technique entails much greater swings. It tries to remove the vacillation of the minute-to-minute price moves that we see in markets every day. And the tailored trading technique has two numbers. It has a resistance and support. And the prices generally trade within the resistance and support numbers. And as you can see, prices after they cleared the calculated resistance number up here at 39.48, of course they overshot a little bit because nothing is absolute in the market. But then after having done so, again, down in another time and price trade setup. Okay, here's the first leg, consolidation. Here's the second leg. All right, where's it going to go through the rest of the day? Now, I don't know. I don't have a crystal ball. But if I were to rely on my tailored trading technique in combination with my 6 trade setups that I teach in my course, I would have gotten on with the gap trade this morning, which I did. And I also got off at the gap trade. Why? Because, first of all, I hit my target. My target was right here at 39.46, which was the previous day's close. Too close to the calculated resistance to even trade these 3 points right over here between the resistance and yesterday's close. So this was not an area that I'm going to trade. Then I'm just watching, and we can see the shooting star over here, right? You see the shooting star, this reverse hammer or inverse hammer, some traders call it, with an overbought stochastic. And of course, you could take a trade to the downside, figuring that if it violates the top of the star at 39.59, you get off and set that as your stop. But as you can see, prices did bounce around near there, not quite, and then collapsed. So collapsed where? Within my trading zone. So the trading zone forecasts that the prices could bottom out down here today. Will they? I have no idea. But the fact of the matter is, if I were to trade just a single tailored trading technique, what I would do is I would get on where the prices either hit the high at the open or the low at the open and trade the tailored trading technique the rest of the day, if I had that degree of confidence, of course. The issue is, how do you trade? How do you read the market? Do you trade short term, as in scalping, where you can use a trade setup? And of the trade setups, can you spot them easily? And or are you looking to be more of a swing trader, a daily trader, where you want to discount the volatility midday and trade the tailored trading technique? It's not going to be accurate every day. Some days the trading technique needs transposing. Some days you really have to just avoid using it at all. And some days you shouldn't even be trading because things just don't feel right. But at any rate, that is my video for today. Thanks so much for watching. Trade with lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar.